So if you are an entrepreneur who is as good operating at scale as Bezos and this team, how do you think about unionization over the long term? Is it truly a drag on innovation and efficiency? Or is it, given the dynamics, the macro dynamics you just laid out, is it sort of an accepted cost of doing business now? Is that, do you think, is that how Amazon's viewing the next 15 or 20 years of labor relations?
You know, my guess is that it's the latter. We've seen the narrative around the gig economy shift very meaningfully from this narrative of it empowering workers and being really on the side of labor to these companies now are big and powerful enough that now that narrative is turned around. And this is going to be a dynamic that's here to stay and that they're going to have to confront and deal with. You know, what's interesting to me, though, is while we're seeing investors have a backlash against these companies, we're yet to see that really playing out on the level of consumers and users. And so, you know, I think that there will be a question there as to whether these companies can ride this out in such a way that they deal with the investor backlash over the short term, but their margin profiles and the underlying dynamics of the businesses themselves can persist. And the investors will just have to come around eventually.
Jill, that is such a good point. I'm glad you bring it up, is what has sort of been the reaction from the investor community. I think I read 3 Amazon notes yesterday from brokerages. The first thing I did was search for the mention of union, and I think there was one mention. It just feels like investors don't really think that this union vote in Alabama has the ability to really threaten Amazon's efficiency, the efficiency that made it the #1 e-commerce player in the country. Are they sort of complacent? Are they ignoring the effects? Or do you think that this is just a really long, slow process that ultimately isn't going to go anywhere?
I think that those investors are probably looking at the longer term, and they're looking at, you know, the ability of these big now bellwether tech companies to ride out these types of storms. You know, you look at the controversy around Facebook a few years ago, not just around Cambridge Analytica, but also around accusations of workplace mistreatment by contractors, et cetera. And Facebook came back from that guns blazing, no issue. And so you have this kind of split amongst the investor community of some investors looking at the more short-term, intermediate term. Again, with the Deliveroo IPO, there is a very real investor sentiment issue there. But then you also have investors who are taking the other side of that trade and saying, you know what, these companies have the ability to ride this out, and we're in this for the long term.
Jill, when it comes down to it, though, these are the 2 biggest employers in the U.S., and they're battling not so much for in-store brick-and-mortar dominance, but for logistics dominance and connection to the end user. And it seems like no matter how you look at it, the clock is ticking on the value of warehouse work by human beings. So even if the unions win, part of what they've got to figure out is how to improve the long-term prospects for that worker in that blue-collar demographic that at this point is kind of a cog in the logistics machine. And I hear about wages, and wages are important, but wages are not going to be the saving grace here, right?
No, that's right. I mean, it comes down to so much more than that. And I think that it's a great point. You know, we for so long have talked about this technology, these technology companies as being these miracles of software and the internet. You know, that's what's enabled the margin profiles to look like what they do. And there's this reckoning happening right now that underneath all of that, it's come down to cheap labor. You know, you could call it exploitation in some cases. And I do think that there is, at least in the short term, a reckoning happening here. Again, to me, it all comes back to whether or not consumers actually start to care about that, not just investors over the short term.
Yeah, the consumer voice, to your point, has become really powerful in the last few years.
Shepard Smith here. Thanks for watching CNBC on YouTube.